What's up, guys? Welcome to another episode of the Halo Effect podcast. In this episode, I will be highlighting different ways that you can invest in real estate by going over different real estate investing strategies, what they mean, my thoughts on them. I will say that I don't have experience on all of these. Real estate is definitely a game that, takes a long time for you to master every level. There's levels to real estate. There's levels to how you do each particular strategy. Definitely takes time to master every strategy. I don't recommend, nor have I ever seen an investor focus on all the different strategies out there. Typically, what they do is they find the strategy they understand the most, the strategy that works for them, and they essentially just run with that strategy and master that strategy, and then maybe use that strategy once they have mastered it to leverage and get into different strategies from that point. So, like I said in this episode, I'd like to highlight some of the different ways that you can invest in real estate. And the first being probably the most common one, the one that a lot of people are used to and familiar with, and that's owning rental properties. And essentially, what that means is you purchase residential or commercial properties and rent them out to tenants. You then get rental income that is provided from the property through cash flow, and with that, the property also appreciates in value over time. And at the same time, your tenants are paying down your principal and or your loan on that property. So buying rental properties is probably the easiest, most steady way to invest in real estate. And what a lot of people don't tell you, however, is that doing this strategy is going to take time. It is going to take work. You're going to have to deal with tenants. You're going to have to manage the property or outsource the property management of the rental properties that you have. However, it can be very easy compared to other methods to own real estate because you can use conventional financing with rental properties, move and buy a rental property essentially every year, move to that property, make it your primary residence, and pay the minimum down payment on that property. So, the beautiful thing about the United States of America is that you are able to finance properties at a fixed rate for 30 years. And you only have to put down 3 to 3.5% to buy a property. And that is if you don't take advantage of down payment assistance programs. Now, down payment assistance programs aren't for everybody. There are always catches with down payment assistance programs, unless it's a grant program, a really good grant program, or a really great just down payment assistance program offered by a city or county within the city. And there's a couple here in Denver that come to mind. However, so after you buy your first rental property with 3 to 3.5% down, maybe take advantage of a grant, you can then buy your second property as long as you have the down payment that you need for that property, which usually is 5% for the second rental property that you buy. After a year, you can essentially do that. And you could keep doing that for up to, I believe, 5 or 6 properties using conventional financing and maybe more. But you can keep doing that over and over and over again. Now, the strategy that I recommend with rental properties is something that I've talked about on social media before, is buying multi-family residential properties. And essentially this means buying duplexes, triplexes, or quadplexes, because owning these types of properties offer great tax advantages. And you're also owning more than just one unit that you can now rent out using different rental strategies, whether that's short-term rental, mid-term rental, or long-term rental. And if you're able to buy and sacrifice maybe not buying the property of your dreams initially and buying a multifamily right off the jump, renting out that property for the first year and buying another multifamily unit and doing that over and over again, you're going to set yourself up nicely in the future. So that is the first rental strategy. And I just gave you some nuggets, some tips as far as how you can go about buying multiple properties in a short amount of time. I think it's very important to identify, maybe write down a goal of how many properties you want to be able to own within a certain time frame, and then reverse engineer from there so that you know what you need to do each year to be able to qualify for a property depending on how often you would like to buy real estate. Most people think that you have to just buy your one property and live there for 30 years. If that is you, if that is what you want, that is completely fine. If you are like me and you see real estate as a vehicle, as a tool, then know that this is possible. Know that you can buy more than one property within a 30-year time frame. There's people that buy dozens of properties within 5 years, 10 years, 15 years using conventional and creative financing. Strategy number two, which is also a very popular strategy, is flipping houses, house flipping. We've seen a lot of shows on HGTV, a lot of shows that popped up that have shown the beautiful side, the cute side, the pretty side of flipping properties. But this in itself can also be a very, risky process if you don't know what you're doing. But essentially, if you don't know or are unaware of what this entails, you essentially buy distressed properties, properties that need work, properties whose current owners are not able to upkeep over their time in the property. And so you buy that property, you renovate that property, and then you sell that property at a higher price. That is the basic explanation, the most basic explanation of house flipping. Again, this strategy requires an understanding of market trends, renovation costs, and potential profits. A couple of things I want to touch on with flipping houses. Very important to understand the market, what the market is doing, maybe even anticipate what it's about to do. Understanding the seasonality of real estate, when real estate tends to sell more within your market, also what's going on in your market and in the economy, as all of that is going to influence what your property could potentially sell for. Very important also is understanding the renovation or the rehab cost of the house you are looking to flip, which essentially means that if you don't do construction, working with a reliable, knowledgeable contractor is very important, because you want to make sure that whenever you're flipping a house that you fall within the rehab budget that you have set aside to flip that house, because if you go over budget, that can affect your profits, and ultimately you may even incur a loss from that house if your renovation costs go over what you had anticipated. There's a couple different ways to get into flipping when it comes to finding properties. You could work with real estate agents directly who focus on finding off-market properties. You could focus on building relationships with wholesalers who essentially buy properties at a discount, or not really at a discount, actually. They buy properties for market value based on their current condition at that point. So that is a little bit about house flipping. I will continue with the different strategies in the event that you find any of these strategies intriguing and you'd like for me to go into deeper into detail with these strategies in the future. Let me know. Shoot me a DM, shoot me a message, and I'm more than happy to go into more detail and share my perspective and knowledge on some of these strategies. I don't know all the strategies. I am familiar with a lot of these strategies. I don't have experience with all of them, is what I'm trying to say here. So, as you learn, I learn sometimes, and I do, however, know about a couple of these strategies. So, I'm happy to share my experience and or perspective on some of these strategies. Strategy number three is real estate investing trust, also known as REITs. And a REIT is essentially you investing in a publicly traded company that own, operate, or finance income producing real estate across various sectors, such as residential, commercial, or industrial. A REIT offers liquidity and diversification. And essentially, a REIT is kind of like a mutual fund. If you invest in stocks, you're investing in a mutual fund. If this is something you do, you're essentially investing in the top companies within the American market, within the economy. And so that is what a REIT is, but with real estate. You are essentially investing in a publicly traded company that owns a lot of different properties within the nation. And the goal with investing in a REIT, as I have it understood, is that you are investing in a company that obviously owns real estate and looks to cash flow off of that real estate and also get equity from that real estate. So that is another strategy that you can look into is investing in real estate investment trusts, also known as REITs. Strategy number 4, real estate crowdfunding. And essentially what this is pooling funds with other investors to finance real estate projects or purchase properties through online platforms. This allows investors to participate in larger deals with lower capital requirements. And essentially, what this is saying is just putting your money together with other investors to find deals online so that you don't have to come out of pocket, 5, 10, 15%, 20% to buy a piece of real estate. And you essentially, buy maybe a bigger piece of real estate, such as like an apartment building or something like that, and share any cash flows with the pool of investors, any equity. Um, what I have understood from doing these types of things is that having a clear exit strategy is very important. Understanding how long you're going to be in this deal for and what is the plan for this deal after a certain amount of time. Is the group of investors thinking about holding onto this piece of real estate forever, maybe selling after 5 or 10 years, and making sure that everybody is on the same page, whoever it is that you are investing with. There is nothing more secure and important when investing with other people than putting things in writing. And so, if this is something that you do, that's probably what I would recommend. But always interested to know and hear more about people doing crowdfunding in the real estate space. Strategy number 5 is real estate syndications. This is something that I've came across over the past, I'd say, 2 years. And essentially, this is you partnering with other investors to purchase larger properties or projects that might be out of reach individually. Syndicators typically manage the investment while investors contribute capital. And essentially, this is what Grant Cardone does. And a lot of people online is they gather and gain capital from pools of investors to buy big pieces of real estate. The syndicator essentially puts everything together, and that is a very hands off way for you to be able to invest in real estate. Strategy number 6 is real estate development. And with real estate development, you're essentially acquiring land, you're buying land, and you're developing that land into residential, commercial, or mixed use properties. A mixed use property is, like a mixture between residential and commercial, where you build a property that has condos or apartments upstairs. And then on the main level, you have commercial spaces for, restaurants or beauty salons, etc. So this strategy requires substantial capital, expertise in construction, zoning regulations. You have to understand the zoning. You have to understand what you can and can't do. You also have to understand the permitting process within your city and county that you're looking to develop in. And you have to understand the market. So this is definitely for more seasoned investors. This is where, what I want to get to eventually within my career. I know some local developers in town that develop real estate, in Sunnyside, in Lodi, in other areas. I know the developer of the new building in Rhino. I should know the name of it, but I don't. It's that one creative building with like the slash in the middle, and it looks very unique. So, there are developers out here doing great things with development, and that is one way that you can develop your investment portfolio within real estate, is to develop properties. Strategy number 7 is investing in vacation rentals, essentially purchasing properties in tourist destinations and rent them out on a short-term basis, whether that is through Airbnb or VRBO. This strategy can generate higher rental income but requires diligent property management. So if you do decide to do this, I have a lot of people that reach out to me that want to buy in Tulum or Cancun. Those seem to be very popular areas right now, and I do help people buy real estate out there. Just so you know, I have connections out there that I can connect you with. But essentially, a lot of people are buying down there in Tulum and Cancun, brand new 3-story uh, houses with rooftops right next to the beach, right next to where everything is going on, and making about 30,000, 25,000, 20,000 off of short-term rental out there. It doesn't sound like there's a lot of restrictions with Airbnb and short-term rentals in places like Tulum and Cancun when it comes to short-term rentals here in the United States, and especially here in Denver. You do have a lot more regulations, a lot more taxes, things that you have to consider. I do see the short term rental industry changing very quickly in the future, just because, more people have their hands in the pot as far as taxes and all these other things. So, investing in vacation rentals outside of the United States may be a good move for you, depending on what your ROI is in the area that you're looking to invest. It's important to note that investing in places like Mexico, financing a house out there is very tough to do with a Mexican bank. So typically the best thing to do is to, pull a HELOC here or some sort of loan from here, finance it from here, and then, pay it off in the meantime. So I am still wrapping my head around how the best strategies can be used to be able to finance real estate in other markets, especially as vacation rentals. However, this is something that I'm continuing to learn about. Strategy number 8 is real estate wholesaling. And I touched on this a little bit when I talked about strategy number 2, which was flipping houses. And essentially, real estate wholesalers play a huge role in house flipping, and also essentially, revitalizing a neighborhood, because they truly find properties that are in serious distress, that need work, and they secure contracts on those properties to buy those properties, and then they essentially assign those contracts to the end buyer, which is typically an investor or sometimes even real estate agents that are looking to flip, or real estate agents that have the end buyer. Wholesaling requires strong negotiation skills and a robust network of buyers. I have mad respect for wholesalers. Wholesaling is something that I'm going to start doing myself, just because there are, a lot of people who are looking to flip, who want to flip, and that is not made possible without wholesaling real estate. There are a lot of people that may feel some sort of hate towards wholesalers, and because you hear nightmare stories of wholesalers maybe taking advantage of a homeowner, or just a bad situation going down, and that, I'm sure, has obviously happened plenty, and it happens in every industry, within every you know profession. You have good lawyers, you have bad lawyers, you have good doctors, you have bad doctors, you have good wholesalers, and you have bad wholesalers. However, it all depends on how you choose to look at a particular situation. The way that I look at wholesalers is the way that I've already mentioned. I think that they play a crucial role in revitalizing neighborhoods. I think that they provide, opportunities, and they provide solutions for people that are in distress. I know there's plenty of wholesalers that have helped homeowners who have been in distress without even buying their property, just essentially letting them know what they can do to maybe avoid a foreclosure or, what have you. And so that is another strategy that you can look into if you want to invest in real estate, is focusing on real estate wholesaling. Real estate strategy number 9 is real estate investment groups. Essentially, this is joining or forming an investment group where individuals pool resources to purchase properties collectively. Members share ownership and responsibilities, reducing individual risk. This is kind of like syndications, and also crowdfunding. However, it sounds like it's more hands on, where you share ownership and responsibilities of, managing properties and all that good stuff. Strategy number 10, tax lien investing. This is something that some of you have heard of, but probably a lot of you haven't. And this is essentially you buying the rights to a property whose taxes have not been paid by the homeowner. So you purchase tax liens on the property with delinquent taxes. If the property owner fails to pay those taxes, you then acquire that property through a foreclosure. So think about it. Some of these properties out here only have to have about $3,000, $4,000, $5,000 of taxes paid a year. Sometimes homeowners can't pay those tax liens on those properties, right? And so if you're able to come in and identify one of these properties that have a delinquent tax situation and the homeowner fails to pay it, you've essentially picked up a property for $4,000 or $5,000. And this does happen. I've heard of this happening. However, it is something that me myself I'm looking to get into as well. So, when considering real estate investment strategies, it's crucial to conduct thorough due diligence, assess risk tolerance, meaning how risk adverse are you, how much risk are you wanting to take. That's going to determine the type of strategy that you are willing to take on. And consider factors such as market conditions, financing options, and long term goals. Diversification across different types of properties and investment vehicles can also help mitigate risk. Consulting with a real estate professional, such as myself, and financial advisors, and lenders, and CPAs can provide a valuable insight tailored to your individual investment objectives. So, if you've thought about investing in real estate and any of these strategies sounds intriguing to you, reach out to me. I'm more than happy to chat to see how I can help you. I am also hosting a real estate event at the end of this month. It will be on the 27th of April. It will be at Raisa's Brewery. So if you've thought about investing in real estate, stop by. I will have one of my investor friendly lenders attending that event, answering any questions that you may have, and helping you start your path on real estate investing. So, with that being said, guys, thanks for hopping on to another episode of the Halo Effect podcast. Make sure you follow me on all social media platforms: TikTok, Instagram, Facebook, YouTube. Make sure to check out my website, helointl.com, to be able to start your home purchase here in Denver. If you've thought about moving into Denver, reach out to me. More than happy to help you out. If you've thought about buying, selling, or investing within the Denver market, reach out to me as well. Let's go ahead and make your goals become a reality this year. That being said, thanks for hopping on to another episode of the Halo Effect podcast, and I'll see you guys on the next episode. Peace.